Why will some higher qualified borrowers be paying more for their mortgages soon? Hi, this is James Hecker, Mortgage Advisor, NMLS number 214601. And I'm going to talk to you a little bit about LLPAs. Those are loan level price adjustments. Now, Fannie Mae and Freddie Mac price loans that are delivered to them based on risk, underwriting risk. Underwriting a loan is similar to underwriting life insurance. The older and sicker you might be, the more you might pay for your life insurance. And the same thing is with mortgages. So the creditworthiness and the type of property and how much you're putting down, those all have an effect on the price that you end up getting in a mortgage. But effective May 1st for loans that are delivered to Fannie Mae and Freddie Mac as of May 1st, that means loans that fund by and close by the end of March, the beginning of April, there's going to be some changes and some increases to some of those charges that we call loan level price adjustments that Freddie Mac and Fannie Mae charge. And so if you're buying a second home or buying an investment property, you're going to pay more than you would have before. If you're getting cash out on a refinance, you're going to be paying more for the pricing adjustments. And normally they've used those LLPAs to offset risk, but now they're using it with this change effective May 1st somewhat to help promote home ownership in lower qualified rungs, as it were. So if you have a very high credit score and you're putting 20% down or more, versus if you have a low credit score and you're putting 5% down, now normally there'd be quite a bit more charge or expense for getting that low down payment, low credit score loan. But as of May 1st, those adjustments are being changed to make it so that the well-qualified buyer is going to pay a little bit more in order to subsidize the rates that the lower credit score buyer with the lower down payment is going to pay. Now, they're still going to pay more. A lower down payment, a lower credit score is still going to pay more than a higher credit score. But the separation between the two is lessening. Now, what also is interesting about that is the down payment. So if you put 20% down, you're well qualified, you're going to get one rate. But if you put only 5% down, you might get a better rate. And the reason for that is mortgage insurance. So most people know that most loans have private mortgage insurance when you put less than 20% down. There are some exceptions to that, but it's basically built into the cost. But on loans that are sold to Freddie Mac and Fannie Mae, private mortgage insurance is an additional expense to the borrower and lowers the risk to Fannie Mae and Freddie Mac because the private mortgage insurance company shares in the risk. So those people with smaller down payments are actually going to get a better rate than somebody with a larger down payment. And that, is contrary, in my opinion, to conventional thinking, but that is the way it is. And again, that goes into effect for loans delivered May 1st, which means your loan would have to close by the end of March or the beginning of April in order to avoid those additional fees. So if you've been thinking about buying a second home or buying an investment property or taking cash out of your home for improvements or for some other reason, by all means, give me a call, because it's going to be cheaper now to do that than it will after the beginning of April. And again, this is James Hecker, 661-714-2145. There's probably more to say about these LLPAs or loan level price adjustments. So if you have questions, let me know and I'll be glad to cover it. Thank you. Have a wonderful weekend.